And it's Ken Kreitzer for CBSI Services. We're in Washington, D.C. today at the Capital Summit of the Independent Community Bankers of America. And we have a chance to talk with Paul Merski, who is the Congressional Relations and Strategy Director for the organization. Paul, good to see you. Very powerful opening today by the Treasury Secretary.
Absolutely. It was an honor to have the Treasury Secretary here speaking to our group of nearly 1,000 bankers, talking about the key issues happening in the banking sector right now. As you know, a lot going on in the banking sector, some recent failures, a lot of policy responses here in Washington, D.C. So we were pleased to hear the Treasury Secretary's remarks about community banking.
Absolutely, and good to see Derek Williams, your national chairman this year, lead off, took over from Brad Bolton, and great leadership for your meeting today and your organization this year.
Yeah, we'll be doing over 350 meetings on Capitol Hill. Bankers have a lot to talk about these days. Most importantly, distinguishing community banks and our relationship banking from the too big to fail banks and some of the recent big bank failures. So we don't want the policies that they're going to be putting on some of these big banks for their failures as a response to that to impact community banks who are strong, viable, and here in Washington to get their message across.
Very good, and the Treasury Secretary really complimented community banks for their work during the pandemic, serving their communities. What were some of the actions that the community banks did to take care of customers during the pandemic?
Well, certainly we kept the flow of credit to customers. We did the Paycheck Protection Program, did nearly $1 trillion of lending to consumers and small businesses during the pandemic to keep the economy going, to keep people whole. And, you know, that's just what community banks do. They are there for their customers in good times and in bad. And we got through the pandemic, and there's some challenging headwinds in front of us now, but we'll get through that as well. Many of our community banks have been around for over 100 years, so they've seen recessions, depressions, and we get through it, and we serve Main Street.
Now, the Treasury Secretary today talked about the banks that had failures this spring being fundamentally different than community banks. Why are community banks different? Certainly, they're serving communities, but why are they different than some of the banks that had problems this spring?
Right. That's a great question. Community banks have a personal relationship with their customers. They're not an account number. The community banks do well if their customers in their local markets do well. So we collect deposits in our local markets and we lend that out to the local communities. Where the large banks can collect that money anywhere and move it anywhere around the country, we're all completely focused on the well-being of local communities.
And the costs of the banking crisis this spring has been a concern to community bankers bearing the brunt for the insurance fund and other costs, increased regulation. How are you, again, able to differentiate the banks on some of the costs and regulation that might emerge from this banking crisis affecting larger banks?
Right, that's a good question. So no taxpayers will pay anything for the cleanup of some of the large bank failures, but the important thing is the community banks don't want to have to pay for that as well. As you know, in this country, we have FDIC insurance. Most people's bank accounts are fully insured by the Federal Deposit Insurance Corporation, but the banks pay for that insurance. Because of the large bank failures, the Deposit Insurance Fund probably took about a $20 billion hit. And the assessment to pay for that will be paid for by the large banks that caused these failures rather than community banks.
And as said, you're going up. Your members will be going up to Capitol Hill to talk to their members of Congress. You've got bankers from all across the country today. And what will be some of the messages that they'll talk to their elected officials about today?
Right. The key message is really distinguishing community banks, the nearly 5,000 community banks around the country, from the large, too big to fail, systemically risky banks. Our our banks are not of the size that are going to bring down the financial system. So we want to make sure that because of these recent big bank failures, the policy implications of that don't end up hurting our banks that are doing a good job out there in their communities.
And you mentioned that you have 5,000 community banks. I read that you have 700,000 people employed in the industry, a huge amount of deposits. Just maybe describe the impact of your community banks around the country and what they do for their communities.
Yeah, certainly. We're outsized small business lenders. We do half of all the small business lending in this country. We do 80% of all the agricultural lending. So most of the farms, ranches are all financed by their local community banks.
And any final thought as you're in your program? You have bankers from all over the country here, and Derek Williams leading the meeting.
Yeah, I'm very optimistic. Very good turnout here in Washington. Nearly 1,000 bankers. We'll do over 350 meetings on Capitol Hill and just get our community banking message out that we're safe, we're sound, we're strong, and we want the policies here in Washington to make sure that they're not harming community banks.
Paul Merski from the Independent Community Bankers of America. Great to talk with you, and I appreciate the chance to sit in your conference here in Washington, D.C. This is Ken Kreitzer for CBSI Talking Business. Thanks for watching.